Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Government borrowing surges to 1.757 trillion pesos from January to July. Moody's projects the Philippine economy to grow 5.7% this year, outpacing most regional peers. Houthi fighters raid UN offices in Yemen, detaining nearly a dozen employees. Global markets finished the week on a weaker note. Let's take a look now at how they closed on Friday. Wall Street ended lower, pulled down by a sell-off in AI-related stocks. Dell was among the hardest hit in the S&P 500, sliding nearly 9%. Nvidia also extended its losses for a third straight session, dropping almost 3.5%.
They're firing on all cylinders. They're probably going to beat, and the stock's probably going to go down because the expectations that are built into this company are just enormous. When you're over a $4 trillion company, how fast can you keep growing? They grew at 56%, and the market said, well, wow, that's the slowest we've seen in a while. Yeah, the law of big numbers says you can't. If you keep growing at 50%, you will become the world at some point. So it is going to have to slow.
The Dow Jones Industrial Average shed 0.2%, the S&P 500 lower by 0.6%, and the Nasdaq with a sharper loss, down by 1.2%. Over in Europe, stocks also closed lower. London's FTSE lower by 0.3%, Germany's DAX down by 0.6%, and France's CAC 40 lower by 0.8%. Here at home, government borrowings surged this year as it climbs to 1.757 trillion pesos from January to July. Data from the Bureau of Treasury shows this is up 11.34% from 1.578 trillion pesos in the same period last year. The increase was driven mainly by higher foreign debt, a concern because it makes the country more vulnerable to global interest rates and currency shifts. This matters for the Philippines since higher borrowing costs can crowd out funds for development and weigh on future growth. Philippine exports face new pressures from U.S. tariffs. Key products, including electronic data machines, coconut oil, apparel, and travel goods, are among the most affected by Washington's 19% reciprocal duty. Trade Undersecretary Alan Gepti told a Senate hearing that electronics are most at risk, with data machines in particular facing the heavy tariff. He said Manila is seeking exemptions for several products, including coconut oil, aircraft parts, and travel goods. He argued that these are either complementary to U.S. products or not produced there. Gepti noted that 53% of the country's exports to the U.S. are semiconductors and electronics. Semiconductors are already exempt, but other electronics remain subject to the tariff. He added that the rate remains open to negotiation. This matters for the Philippines because exports to the United States support millions of jobs and are a major source of dollars that keep the peso stable. Investments in New Clark City are picking up pace. State-run Bases Conversion and Development Authority, or BCDA, approved 57.5 billion pesos in investments from January to August. BCDA President and CEO Joshua Bingkang says that this ranks the agency as the third largest investment promotion body in the country. It trails only the Board of Investments and the Philippine Economic Zone Authority. The BCDA listed key contributors, including the Waste to Energy Consortium of Global Heavy Equipment and Construction Corporation and the Science Park of the Philippines. Santa Clara International, Sekyung Realty also added to the total. The Bangko Sentral ng Pilipinas was another major contributor. These investments are geared toward developments in New Clark City, seen as a flagship growth area to help decongest Metro Manila and drive economic expansion. The Philippine economy is on track to grow 5.7% this year, outpacing many of its regional peers. Moody's Ratings made the projection after a periodic review of the country's credit rating. It cited strong household spending, steady remittances, and sustained public investments as key drivers. Moody's expects the Philippines to maintain stronger growth compared to regional and rating peers. Its forecast falls within the government's revised GDP target range of 5.5 to 6.5% for 2025. This outlook matters because credit ratings shape investor confidence, borrowing costs, and the country's competitiveness in global markets. We have this just in. The Senate Blue Ribbon Committee resumes its probe into the government's flood control projects. Senator Erwin Tulfo pushed for a motion to issue arrest warrants against contractors who were a no-show at the hearing. This was seconded by Senate President Pro Tempore Jinggoy Estrada. Those who were absent are Maria Roma Angeline Remando. She's the owner of St. Timothy Construction Corporation. The president of Top Notch Catalyst Builders, Yumir Villanueva, also failed to attend today's hearing. We'll give you more updates on the hearing in our succeeding newscasts. Now, the flood control controversy takes a new turn. President Ferdinand Marcos Jr. has formed an independent commission to investigate allegedly anomalous flood control projects following the resignation of DPWH Secretary Manuel Bonoan. The commission will review the projects, identify irregularities, and recommend accountability measures. Marcos has also appointed Transportation Secretary Vince Dizon to head the DPWH, allowing him to impose a full organizational sweep of the agency. This move comes as the DPWH faces allegations of defective, incomplete, or ghost flood control projects. Dizon took his oath before President Ferdinand Marcos Jr. Despite his resignation, the House Infra Committee will still invite Bonoan to its investigation into the flood control project controversy on Tuesday. Dizon's appointment also comes with a new role for DOTR Undersecretary Giovanni Lopez, who will serve as the agency's acting secretary in the meantime. This shakeup matters because flood control accounts for billions in public funds and is crucial to protecting communities against climate-driven disasters. Batangas Representative Leandro Leviste is turning up the heat on the Public Works and Highways Department, urging it to cooperate with the investigation into flood control projects in his district. Leviste has hired engineers and consultants to conduct a technical audit of the projects at his own personal expense. A flood control project worth 1 billion pesos along the Binambang River in Balayan, Batangas was found to have used substandard material. The DPWH is now making adjustments to fit the required sheet piles. A recently widened segment of Diokno Highway in Calaca, Batangas collapsed during Typhoon Crising. The DPWH is also carrying out repairs. Leviste says these issues highlight the need for accountability as billions in public funds are at stake and as lives are put at risk when infrastructure fails. A new audit is underway on flood control projects. The Commission on Audit has ordered a performance audit of flood control projects. In a memo dated August 23rd, COA Chair Gamaliel Cordoba directed the Performance Audit Office to start the review immediately. The move follows President Ferdinand Marcos Jr.'s concerns over persistent flooding in Metro Manila and nearby areas despite billions spent on flood control. The audit will cover the government's flood risk management and resiliency program and measure whether its projects are meeting their goals. COA expects a report as soon as the audit is completed. The review is crucial because flood control accounts for billions in public funds, and failures put communities, infrastructure, and the economy at risk. Marikina City 1st District Representative Marcelino Teodoro reveals that some completed projects were funded again under the 2026 National Expenditure Program submitted to the Congress by the Budget Department. The Public Works and Highways Department gave the lawmaker a list of projects in his district. A slope protection for a creek in one barangay was already finished, but he saw a budget allocation for it again. He also found funding for the rehabilitation of Malaya Street in Barangay Malanday, but the lawmaker said the road is in good condition. Teodora's findings confirm the revelation of House Deputy Speaker and Antipolo City Representative Ronaldo Puno about questionable items in the 2026 NEP. The SEC is pushing to bring state-owned companies to the stock market. The Securities and Exchange Commission is moving forward with plans to list government-owned and controlled corporations, a move approved by the Department of Finance. The initiative aims to boost investor participation and strengthen the capital market. This could also make the Philippine Stock Exchange more competitive, as the country is the only Southeast Asian nation without publicly listed GOCCs. However, analysts say successful listings will depend on a broad investor base, stronger market infrastructure, and the right timing. If implemented well, the move could deepen the capital market, raise funds for the government, and give Filipinos a direct stake in state enterprises. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are moving this Monday morning. Right now, the Nikkei 225 is well entrenched in negative territory, down by almost 2%. Hong Kong's Hang Seng Index going the other way, higher by almost 2%. Shanghai's Composite higher by 0.2%, and Singapore's Straits Times Index lower by 0.2%. Here at home, Philippine stocks closed lower on Friday, marking a third straight week of losses. The PSE index fell 0.5%, down 34 points to 61.55. Week on week, the market slid more than 2%, with bearish sentiment still in control. This week, trading is expected to move mostly sideways with a slight downward bias as investors await key catalysts, including PMI data and the Philippine inflation report on Friday. With investors still cautious, the next set of data will be crucial in determining whether the market can stabilize or extend its losses. Taking a look at the PSE index this morning, as of 10:20, the main gauge is in the red, down by 0.1% to 61.49. All shares index lower, flat with a downward bias at 36.84. The financials, industrial, holding firms, and service counters $91 million pesos. Market breadth is positive. We've got 79 advancers, 69 decliners, and 43 stocks unchanged. Taking a look at the currency markets, the peso opens at 57.12 to the dollar, stronger than its previous close of 57.13. Now the coconut takes center stage. The Philippines is celebrating its coconut industry at the Coconut Philippines 2025 trade fair, with over 200 MSMEs showcasing new and innovative products. Government officials say the goal is to increase domestic consumption, strengthen the value chain, and help farmers weather global challenges impacting exports. Sujin Kim has the details.
Sana ay tulungan natin ang ating industriya.
This was the call of Philippine Coconut Authority Administrator Dexter Butid as the country formally opened the Coconut Philippines 2025 trade fair. The event gathers over 200 MSMEs from 17 regions, showcasing products until September 2. From virgin coconut oil, cocoa jam, and coconut soap to shoes, accessories, and even new health-based food and nutraceutical innovations.
The coconut is known worldwide now to have a lot of health benefits. So let's take advantage of this. The Department of Trade and Industry is here to definitely help all the businesses that want to sell their product both locally and globally.
To complement the trade fair, the DTI is launching the Coconut Nation Advocacy, an initiative aimed at strengthening the value chain and supporting farmers and MSMEs. Officials also stress that coconut is no longer limited to traditional uses. Even the aviation industry now uses it as biofuel.
The growth of the MSME is really the growth of our GDP.
The Philippine Coconut Authority noted that despite strong global demand for Filipino coconut products, domestic consumption trails behind neighboring countries.
Hindi katulad sa Thailand, sa Indonesia, ang taas ng kanilang domestic returns. Sa atin, medyo mababa. Sapagkat sana matutunan ng bawat Pilipino yung kasabikan natin.
But for exporters, not just in coconut, but for all Filipino products, the 19% tariffs imposed by US President Donald Trump remains a serious threat. Secretary Roque assured support for impacted businesses.
To the businessmen out there who are affected, huwag kayong mabahala. The Department of Trade is here for you, to help you and to assist you.
Part of this support includes expanding market access for Filipino exporters. Sujin Kim, Bilyonaryo News Channel.
The bond market has been rallying on the back of low inflation and lower interest rates, even before corruption issues took center stage after the president's SONA in late July. Stocks have felt more of the impact, but fixed income has held up strongly. To help us understand why and where the market is headed, we're joined by Dino Aquino, the Vice President and Head of Fixed Income at Security Bank. Hi, Dino.
Good morning, Mikey.
Good morning.
I was seeing your red report, so hopefully I can provide something green on the markets.
Hopefully. And taking a look at the PSE index right now, everything is pretty much in the red.
Yeah.
But anyway, let's talk about bonds. As of July, foreign inflows into bonds have surpassed all of last year.
Yes, that's
at
correct.
this junction, it looks like the conditions are ripe for a continued rally in the bond
Yes,
market
that's
and more
correct, that's
broadly the
correct.
fixed income space. Tell us more about this.
Well, the market looks at the macro backdrop, which is very favorable given the benign inflation outlook throughout the rest of the year. The target of the BSB is 2 to 4%, and they're looking at an average inflation rate of below 2%. So that would be very favorable for the bonds moving forward.
So the bond investors, they look at the macro view.
Yeah.
They're looking at policy rates, they're looking at the economic backdrop, and
Yeah.
they're looking at the independence of the BSB.
Yeah.
Whereas on the other hand, equities are going the other way. Equity investors, would you say that they're more micro-oriented? They're looking at the performance of the specific companies, and they need more than that.
Yeah, so they need a better story. Because if you look at the bond market, the story is quite nice. Like, inflation is going down, GDP is decent, and the governor mentioned we're in a Goldilocks scenario, so that would actually be a good story for bond market investors who would want to come in and invest in bonds.
Yeah, that's right. You mentioned BSP Governor Eli Remolona said that we are in the Goldilocks level. Not too high
Not
to
too
slow
low.
growth, not too low to stoke inflation. Why is this a sweet spot for bonds and not equities?
It's a sweet spot for bonds in terms of it's not going up anytime soon. Rates are not shooting up anytime soon. So if you see a little bit of volatility, it could be an opportunity to invest in bonds. They're still relatively high if you look at the market right now. Pre-pandemic, the policy rates were around 4%. So we're still at around that the 5% level. So it's still relatively attractive if you look at the valuation of bonds.
Taking a look at equities, right now the PSE index is down by 0.6%. We're at 61.21.
Yeah.
Your in-house year-end target from your economist, Jello Taninco, was 6,700 level by the year end. We seem to be very far from that. Why is it that equities seem to be more sensitive to, let's call it, political noise?
It's more of they look at it as you mentioned on a micro level, whereas the bond investors from foreign flows look at it on a macro perspective. And of course, there's the possible inclusion of the Philippines to the JP Morgan index, which also fuels the good story in the bond markets.
Okay, that is a good story to look forward to. The Philippines may soon be included in JP Morgan's emerging bond index. First, we'd have to enter the watch list. And then after the watch list, a couple of months before we're actually included in that index. HSBC says the estimated inflow is about $3 billion US. This is going to be great for the peso. How big of a catalyst do you think this is going to be for our bond market?
It's going to be huge. It's going to be huge. And I think if you look at the dynamics, the market is much more liquid compared to the previous years. And I think that's one of the reasons why we're considered to be included in the watch list. So with the improved liquidity, inflation benign, decent growth, it's really a good story if you're looking at the bond markets right now.
Yeah. Another thing we're looking at is the Fed. With the BSP easing locally and perhaps maybe another rate cut, another 25 basis point rate cut by the end of the year, the Fed is now signaling a cut as early as September. Are Philippine bonds being more, I mean, they seem to be moving very independently from the U.S. Federal Reserve.
We're moving on our own merits. Even if the volatility in the U.S. bond markets have heightened over the past few months, we've been moving quite separately from them. We decoupled from them. Our rates are actually moving lower. Last July, bond rates in the U.S. went higher, but local rates moved lower.
Yeah.
So we're actually moving independently, moving on our own merits, and being less dependent to the Fed, which is a very, very good sign.
Yeah. In terms of interest rate differentials, this is the tightest we've ever been.
50 bips.
Yeah, 50 bips.
Yeah.
Okay, now, right now, portfolio managers, how should they look at allocating bonds? With equities going the way they are, with bonds rallying and perhaps our inclusion in the JP Morgan emerging bond market index is going to be so much more bullish for bonds. What is the ratio? How much would you suggest they have in bonds as opposed to equities and other asset classes during this particular cycle?
Probably around 70-30, 60-40, majority of bonds, and keep a dry powder for the equities, given it's very, very cheap right now. As you mentioned, it's at the 6-1 level. So it's the price in terms of PE ratio is very attractive. I don't have the exact number, but I think it's cheaper than the pandemic levels. So it's really cheap to invest in equities right now. It's just unfortunate that the flows are not coming in just yet.
Okay, for institutional investors, should they extend the duration while rates are falling? Because value comes with the duration.
Yeah, the sweet spot right now is in the 5 to 7 years in the belly, given another possible BSP cut. But if you look at towards the long end of duration, the 20 years still looks attractive at around 6.4. So it's even higher compared to the year end 2024 by around 10 bips. So that's actually cheaper if you look at it. So it's quite attractive right now if you want to extend your duration.
Yeah, for CFOs and treasurers, what's the message on funding costs and corporate issuance strategies as the bond market strengthens? We're looking at interest rates. They're not going to go up anytime soon. This gives them the latitude to really time.
Yeah, they can take their time. They can plan their borrowings better, so they can get their funding cheaper over the next few months or even a year, in a year's time.
Another big push, especially for retail investors, with RTBs now available through GCash and other apps. What role should government bonds play in private portfolios?
So that actually gives ample liquidity to the market. I think in terms of the electronic or the trading in terms of the platform, I think 100 billion went to the GCash platform. So that's a big liquidity that's coming from retail investors. So that's the improved liquidity that everyone is talking about. And that's also one of the reasons why we're also being
in the
considered
JP Morgan
in
bond
the watch
index.
list because of the improved liquidity.
So improved liquidity. So these are all really good indications for our bond market. You know, with platforms like G Bonds and PDAX opening access for as little as 500 pesos.
Yeah.
We're seeing real democratization of the bond market. At least more people are aware. There's going to be more participation, more liquidity. What do you think this could mean for, again, liquidity and market depth?
It will drastically improve the market depth. I remember Secretary Recto even mentioned it's cheaper than buying Starbucks. Just buy T-bills at 500 pesos. So again...
T-bills and a different kind of chill.
Yeah, T-bills and a different kind of chill, right? So it will improve liquidity. It will make the markets more dynamic. And of course, it will actually attract more foreign investors to come in.
And dynamism is exciting.
Yeah.
As more Filipinos buy bonds through apps and G-wallets, does this broaden the base and stabilize demand? Or could it add volatility as retail investors pull out? What are your thoughts on that?
No, I think it stabilizes demand because retail investors usually buy bonds and just hold it to maturity. So in terms of volatility or it coming back to the market or they selling out,
they'll be buying and holding.
They're buying and holding, especially if it's a short-term bond investment, they'll most likely hold that bond.
Okay. If you had one piece of advice for investors today, whether a small RTB buyer or a large institution, given the cycle we're at. We're in the middle of the BSP's easing cycle. Inflation is benign. The macro environment is looking pretty good. What advice would you give them?
Get yourself into bonds. You can't go wrong. At the end of the day, even if there's some volatility involved in the market, you have your coupon payments coming in every 6 months or every 3 months in terms of the RTB. So it's really a good time to be invested in bonds right now.
Yeah, just on another topic of national interest, corruption, political noise, that's center stage. I know you can't talk too much about this, so we'll talk about it in a broader context.
Yeah.
How much does cleaning up corruption matter for our bond market?
Well, I've been in the market for more than 20 years. It didn't really, the noise, there was a lot of noise for the for the past 20 years.
It's ongoing.
And it's still ongoing, but it didn't really deter foreign bond investors from coming in. But if you mention reforms, possible reforms, then it could actually entice them to invest even more.
Yeah, if the situation gets better, it can even get better. From an investor standpoint, do government reforms matter as much as rate cuts and growth numbers?
No, it's all about rate cuts.
It's all about rate cuts.
Yeah.
All about interest rate cuts.
All about rate cuts. And of course, the overall macroeconomy. Yeah.
All right. Thank you so much,
Thank you,
Dino
Maiki.
Aquino,
Thank
the
you.
head of fixed income at Security Bank, for sharing your insights with us today.
Thank you. Thanks for having me again.
And we're going to be taking a short break. Business 360 will be right back. Welcome back. Motorists face another round of fuel price hikes next week. The Department of Energy expects gasoline to go up by 60 centavos per liter, diesel by 1 peso per liter, and kerosene by 50 centavos per liter. This according to the DOE. The increase is driven by a drop in U.S. inventories and new U.S. tariffs on India. The latest adjustment puts more pressure on transport costs and consumer spending, with ripple effects on inflation, business operations, and the wider economy. The Labor Department is reminding companies that pay negotiations don't end with the minimum wage. The DOLE says private sector employees have the right to bargain for higher compensation beyond government-mandated increases. Labor Secretary Bienvenido Laguesma stressed that collective bargaining is a guarantee under the Labor Code, encouraging dialogue between management and employees. He also urged workers to invest in skills development to strengthen their case for better pay, a move he says can ultimately benefit companies through higher productivity and competitiveness. The department reiterated that minimum wage remains a safeguard against underpayment, but only Congress can set a uniform rate nationwide. Laguesma highlighted the need for policies that balance competitive business costs with worker welfare. For business leaders, the message is clear. Proactive engagement with workers on compensation and skills isn't just a labor issue, it's a strategic investment in industrial peace, productivity, and long-term growth. The Department of Justice issues a subpoena to D&L subsidiary Oleo Fats Incorporated, or OFI, over a tax evasion complaint filed by the Bureau of Internal Revenue. The case covers alleged failure to supply correct information for tax years 2019 and 2020. In its disclosure, D&L said that the complainant claims OFI used ghost purchases to overstate expenses and reduce taxable income. The company noted that OFI and its officers will respond to the complaint before the DOJ in due course. D&L assured the public that its operations will continue as usual while addressing the case. It also stressed that neither D&L nor any of its subsidiaries engage in such practices. The case puts a spotlight on tax compliance and corporate governance, issues closely watched by regulators, investors, and the business community. Ayala Land shares surged last week, lifted by the MSCI rebalancing, strong foreign inflows, and expectations of lower interest rates. Ayala Land closed at 28 pesos per share, up 3.3% from the previous day's 27 pesos and 10 centavos. The gain bucked the trend as the property sector slipped less than 0.1%, while the PSE index fell 2% week on week. Data from the Philippine Stock Exchange showed the property developer was the third most actively traded stock, with nearly 97 million shares worth 2.76 billion pesos changing hands from August 26th to the 29th. The performance underscores how blue-chip stocks like Ayala Land can defy market downturns when supported by foreign inflows and rate cut expectations. Now, he's a familiar face in the motoring scene, and now ultra-billionario heir Jacob Ang is shifting gears again, this time taking on a new role at BMW Philippines. His move comes as the luxury auto sector faces changing consumer demand and a global push toward electric vehicles, trends that will shape how premium brands compete in the Philippines. Our mobility correspondent G. Baroga has the story.
There's no official announcement just yet, but word is spreading fast. Jacob Ang, the youngest son of ultra-billionaire Ramon Ang, is about to take the driver's seat as the new president of SMC Asia Car Distributors Corporation, the company that brings BMW vehicles to Philippine roads. This comes amid the reported departure of longtime BMW Philippines president Spencer Yu. According to a report from Bilyonaryo.com, there had been some rough patches between Yu and the owners, eventually leading to his exit. However, another source says the split was on good terms and that Yu may even take on an advisory role within the San Miguel Group. Aside from BMW, Jacob also holds key positions in Velocita Motors, an SMC subsidiary and the exclusive distributor of Ferrari vehicles in the country. He is currently the company's chief planning officer and director. Jacob's passion for cars goes way back. In an Instagram post with a caption, "Dad, I want it in green," a young Jacob is seen talking to his father. In another photo, they're posing beside a Ferrari model during the 2023 dealership launch. On the BMW side, Jacob has been at the forefront of their electrified push in the country, spearheading launches for 3 plug-in hybrid models so far this year: the X5, X3, and most recently, the M5 and M5 Touring. Outside the car world, Jacob runs a bistro, complete with a rotating platform that lets guests admire a featured car as it slowly spins 360 degrees right in the middle of the space. BMW Philippines is expected to make things official and release a statement on the leadership change and Jacob's appointment Monday, September 1st. For BNC Mobility, G. Baroga.
We're taking a short break. Business 360 will be right back. Welcome back. Indonesia is moving to strip lawmakers of special privileges after deadly protests. Political parties have agreed to remove a number of perks and benefits for parliamentarians. This was announced by President Prabowo Subianto on Sunday. Protests against these perks have so far left at least 5 people dead. Homes of some political party members and government facilities were ransacked or set on fire. The president has ordered the military and police to arrest looters, warning that their actions may be considered terrorism and treason.
Para pimpinan DPR menyampaikan,
I have ordered the police and the Indonesian National Armed Forces to take the strongest possible action against all forms of damage to public facilities, looting of individual homes, public places, or economic centers in accordance with applicable law.
The unrest matters to the Philippines because Indonesia is a key regional partner in the ASEAN. Instability there can affect trade, investor sentiment, and regional security coordination. Tension is rising between the United States and Venezuela. A large buildup of U.S. naval forces has been deployed in the southern Caribbean. President Donald Trump has vowed to fight drug cartels, and U.S. officials say the operation is aimed at countering cartel threats. But it remains unclear how the military presence will impact the drug trade, since most of the seaborne flow into the U.S. passes through the Pacific, not the Atlantic. Venezuela's defense minister warned his country is ready to fight if the U.S. violates its sovereignty.
I'm speaking to the imperialists of the North. We're getting ready, and we will fight if you dare set foot in Venezuela. We're watching events around the world.
India and China are taking steps to ease tensions. Prime Minister Narendra Modi met with President Xi Jinping on Sunday at the Shanghai Cooperation Organization Security Forum in Tianjin. Modi said New Delhi was committed to improving ties with China. The two leaders agreed to expand trade amid President Trump's tariffs. This is Modi's first visit to China in 7 years. Russian President Vladimir Putin is also attending the event, together with other leaders from Central, South, and Southeast Asia and the Middle East.
They both agreed that the two countries were primarily focused on their domestic development goals, and in this they were partners rather than rivals. It was also an element of consensus between them that a stable and amicable relationship between India and China can be to the benefit of the 2.8 billion people who live in the two countries. The common interests of the two countries outweigh their differences, and the two leaders also shared a consensus on the fact that differences should not be allowed to be turned into disputes.
The talks matter to the Philippines because stronger India-China trade could reshape regional supply chains and affect ASEAN competitiveness, including Manila's role in the global market. Iran-backed Houthi forces raid UN offices in Yemen and detain at least 11 employees, according to officials. The raids targeted the World Food Program, WHO, and UNICEF amid heightened security following the killing of top Houthi officials in an Israeli strike. To recall, Yemen's Houthi leader, Abdul Malik al-Houthi, vowed to escalate attacks on Israel after a deadly airstrike killed Prime Minister Ahmad Ghaleb al-Rawi and other senior ministers in Sana'a, marking a sharp escalation. Israel said that the strike was aimed at the Iran-aligned group's chief of staff and defense minister, and that it was verifying the outcome. Al-Houthi called the slain officials martyrs and condemned the strike as part of Israel's criminal record in the region.
The martyrs, as is clear, are government officials serving ministers. The entire list of martyrs includes ministers working in civilian capacities. The Israeli enemy, with its criminality and brutality, even targets children, women, and unarmed civilians. Therefore, this crime of targeting ministers and civilian workers adds to its criminal record throughout the region.
The escalation matters to the Philippines because UN stability operations are crucial for global aid supply chains, and heightened Middle East tensions can impact oil prices, trade routes, and regional security. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.